joining us for day 4 of this tremendous adventure. I'm pleased to see you back, and I think we're going to have a really interesting conversation today. As always, special thanks to Basecamp and Stripe as our 2020 headline partners. We really appreciate working with them. Today, our topic, we're going to run for about 25 or 30 minutes, and our topic today was suggested in MicroConf Connect. It was a question from a MicroConf Connect user, and he asked about funding options to weather this downturn. And he didn't just mean raising angel funding, trying to raise VC the traditional paths, but was, as we got into the conversation, actually talked about, what would taking on some debt look like, lines of credit, that type of stuff. So I brought an expert in sales and fundraising onto the show. The man to my right is Einar Vollset. Many of you may have heard him on Startups for the Rest of Us. He's been on a few times, and you may know him as the co-founder of TinySeed. Einar, you want to say hi to the MicroConf On Air folks?
Yes, hi. Once I've turned off mute button, at least. How's it going?
Yeah, I know. I muted myself too. So, yeah, Einar's joining us from shelter-in-place Santa Cruz. And although I'm in Minneapolis, we do not have a shelter-in-place order, but we are kind of just living like we are anyways, I go to the post office once a week to drop a package off. I went to the grocery store yesterday, but aside from that, there was a lot on the shelf at Costco. I was really surprised.
Oh, yeah. I mean, I don't think the supply chains are necessarily that messed up, at least yet.
Yeah. So Einar is, as I mentioned, he's my co-founder with TinySeed. He and I met years ago through MicroConf. He's been a bunch of MicroConfs. Every time I ask him how many, he says the maximum number that have been held, even though I know that's not totally true, but that's his joke. He got a PhD in computer science out in the UK. He taught at Cornell, taught some computer science, and then left that glory. Oh no, I guess you did Y Combinator in 2009, so that was before the computer science, the PhD. Is that right?
No, after. No. I finished the Cornell in 2007.
Got it. So you left the glorious world of academics to join Y Combinator and start a startup.
To slum it with the rest of us.
Yeah, exactly. So, anyways, today we're going to dive into this question from Landon Bennett. But first, I have a joke. It wouldn't be MicroConf without some type of joke, right? So it's just Monday morning levity or Monday afternoon levity. I promise I won't do this every day, but a scientist accidentally turned himself invisible. He was worried, so he went to his doctor. Unfortunately, she couldn't see him that day. Got it. It's a crowd where there's no one on the other end responding.
Bad. It's so bad.
It really is. So, all right, so yeah, uphill from here. So the question in MicroConf Connect, if you're not in microconfconnect.com and you're a founder or aspiring, you can head there to join. It's our Slack group. We have hundreds and hundreds of folks that are in there. We had 1,200 who we've sent out invitations. If you haven't gotten your invitation, check your spam. Email support@microconf.com. And we have a channel in there called MicroConf On Air where people can ask questions. So Landon Bennett asked a question last week. He said, I'm super interested to hear about what other founders are thinking about in terms of funding to weather this downturn we're entering into. Was thinking this might also be a great talk for MicroConf On Air, which is why we're doing it here, as I'm sure a bunch of founders are thinking about this right now. So I came back to him and I said, look, are you thinking of raising angel funding or venture? Because right now things are slowing down, if not at a standstill. So going out and trying to raise funding is not going to be ideal. So what were you thinking? And then he added some flavor to it. He said, I figured it would be harder to raise, but I'd bet there are a number of entrepreneurs that are wanting to add a little cushion as we go through this downturn, especially those that have employees. Landon, are in a good financial situation, but we want to make sure we plan for a recession that may last a while, for example, 12 months. I've talked to a bunch of founders that are looking at everything from VC to angel to loans. And so today, over the next 20 minutes, Einar and I are going to dig into the options that we're seeing and where many of them are. So I believe I have 7 or 8 bullets here, and I kind of want to, it's things you've all heard of, right? Like friends and family, angels, venture capital. We also we're going to talk about pipe.com. We're going to talk about SBA loans because there's a program that's either coming together or it has come together. Einar is a lot more up to speed on that than I am. So that sound good?
Perfect.
All right. So let's dig in. So friends and family, angels, and VCs. What's your take on trying to start, if you're not, close to closing a round today and trying to raise a round from those three entities, let's kind of group them all together. What's your take on that?
You broke up a bit there, but my view on those kind of on friends and family and angels is I think that's pretty much frozen solid as a market unless you already have sort of handshakes and soft commits and that sort of a thing in the bag already. There are still I still think there's some option, but certainly it is a completely different narrative than even just 3 months ago. I think the sort of one exception to it is if you happen to be in an industry where you're seeing a huge amount of growth because of this. I can see some angels being interested in supporting things. So if you're a Zoom competitor or anything to do with remote work or custom hand sanitizer manufacturing or something like that, then friends and families might still work. But I think right now the sense that I get from most investors and certainly sort of non-professional investors is that everyone is sort of in a wait and see mode. I mean, the Federal Reserve just today announced that they basically have unlimited money to print. And you would think that after the markets close down 4 or 5% on Friday, when the Fed says we'll give you unlimited liquidity and we'll start buying corporate bonds, that the market would hold up. But at least as of an hour ago, it was still down 4 or 5%, and directly the that people like angels have to invest. So unlike say a traditional venture capital fund, which has they'll feel some strain too to potentially in the short term. I think angels are seeing available capital to invest in startups shrink 30% in a month. They're definitely going to pull back.
Right, and because that's when the stock market drops like this. If you're talking to a person that doesn't have a fund they've raised prior, like venture capitalists go out to limited partners, they raise the money, and then they deploy that over many years. They theoretically offers they're able to invest right now. But as you've said, if it's your uncle or if it's just an angel who has lost 30% of their net worth in the recent market crash, that's going to be a much tougher sell. So I'm with you in that boat. I think that those buckets are going to be tough to raise from.
Yeah. And I think even sort of traditional venture capital, like I think publicly everyone will be saying like, we're still open for business, never done so many deals, blah blah blah. And certainly that was the sort of tone about a week ago. I still think you'll end up in a scenario in sort of even for the committed funds that they'll sort of look at their portfolio, look at the amount of dry powder they have, and they particularly because people are talking that it could be a 12-18 month recession. A lot of them will want to reserve potentially more capital for their sort of existing investments than necessarily wanting to get into more companies. I think the way you'll see that is people will never admit to that, of course, because deal flow is alpha and omega in the venture capital world. But what will happen is all of a sudden everything takes a lot longer. All of a sudden the guy could turn around a term sheet in a day. All of a sudden takes a month, and now he has a due diligence to do, and he wants a couple more reference calls. And so I think even that is right now at least, and for at least the next month or two, I would say it's extremely challenging even against existing venture capitalists, unless you're in this like I said Zoom bucket. Right, kind of an exception.
And that's the thing is like venture capitalists don't have. I'm not sure what the motivation would be at this point to rush deals through, because I think a lot of us are in a wait and see position, right? It's like
I think
just in general
like that,
in life, it's like we don't know what, like, are my kids going to go back to school in 2 weeks or not? I don't know yet. I'm kind of waiting and seeing on that. So I'm not making any big, even personal or business commitments right now for the next 2-3 months, because I don't know if my kids are going to be home until the summer. So you can imagine someone with millions of dollars to invest. It's like, why would you risk that and push that out, quickly? I think, but there are other options, right? I mean, we've kind of said those are going to be tough, but there's funding. There's this revenue-based financing, right? It's stuff like Lighter Capital, SaaS Capital, Bigfoot Capital. There's, I don't know, 20, 30 others. What's your take on how well, at least, what's your take on that space? If you have any info or on how it would be to try to raise revenue-based financing right now.
So I worry about that as well, simply because these are credit markets, and so I think like a lot of the revenue-based financing guys, they're looking, they're you have to have a certain amount of money. So I think for most of the revenue-based financing shops, you're not going to be able to tap into that even in good times unless you're doing $500,000 a year. So that is pretty much closed to most sort of bootstrappy independent SaaS companies anyway.
I think Bigfoot that goes down to 15K a month. So would that be just under 200K ARR? But I think they're on the lower end. Yeah.
I think 250 is like the very lower limit, I think. And I think they're likely to up that just because a lot of the time what these guys do is that they basically have giant spreadsheets with their preferred risk model, and they predict a certain amount of growth, right? And it's like, okay, I take the growth, this is how I make my money back. Now if you're in a very uncertain scenario, they're likely to want to put in bigger buffers on that, and so the available credit limit's going to be I think it's just going to be lower. I could be wrong. I'm by no means an expert on revenue-based financing, but that's my hunch. Revenue-based financing, at least the big shops, are tied much more into the securitization markets and sort of the actual credit markets backing this stuff, and that one is like the credit markets. This is essentially why the U.S. Fed is just saying they have unlimited money to buy things like high yield bonds, which effectively is corporate debt, right? And that's because the credit markets and the public markets have been seizing up almost completely, and you can tell, and without getting too nerdy, you can tell that by looking at what's called the spread between what's considered safe, which would be treasuries, the yield you get on treasuries versus the yield you get on corporate bonds, and that's been spiking unlike anything we've seen since 2008.
Right. So until that settles down, even again, these revenue-based financing folks have raised a big fund, so they should theoretically have dry powder to spend. So it's not like they need to go out and get it. But the prudent approach right now, right, is to be
there's that too. And like most of the time in credit markets, it's not like equity markets necessarily, or it's more like they may have raised, if they say they have a $500 million fund, they may actually only have $100 million, and the other $400 million are securitized and bring in from other credit lines. Okay. So that might be under strain as we speak, but I haven't heard anything specific.
Right. Okay. So verdict's out on that one, and I'm guessing it's going to be player to player. Again, if there are 20, 30, 50 of these, it's going to be, well, there's two things, right? One, you can contact a lot of them, but two, there's going to be a supply and demand thing coming up, which is what you're saying, where like everyone's going to be coming looking for cash. A lot of founders are going to suddenly have the same realization that Landon did, and suddenly they're going to get flooded, with requests. And so, as you said, they can raise their the minimums, they can raise the bar of what they will loan out. They can do a lot of things, right? And sure. It's just a typical supply and demand business. There's another option that's just coming online. I don't know if they've actually lent money to this point, but it's pipe.com. And you may have heard Jordan Gall mention it. He's the first one that I heard about it from. But it's basically, if you have monthly customers, your SaaS with recurring, they will pay you out the full year as if the customer paid you annually, and you literally, it links into your Stripe dashboard, and you literally can like check off customers, and they'll get sent to pipe.com, and they write you a check for the full annual that they would pay you minus 15%, expecting them to make it to not churn, right? And so if they churn, then you have to like replace them with another customer in essence. So all it is it's taking your full annual payment, even though the customer is not paying that. Did I describe? That was a little bit confusing, but basically you can turn monthly customers into sense. Annual. Yeah, and pipe.com will pay you minus that 50 fee. Again, I don't even know if these guys are online yet, and without knowing if they raised a fund or if they're going to credit markets, it's kind of hard to know, right? And I have to imagine they're getting inundated coming on the market right now.
Of course, yeah, and I haven't actually. I spoke to Jordan briefly about it, but I mean that's like there's nothing new under the sun, as it were. I think that's similar to invoice financing in the more traditional markets, and again, I think factoring. All those things are factoring. I think all those things are going to be under strain. But I could be wrong. It could literally be that what the Fed is doing is pumping in so much money into the credit markets that this is readily available, which we would hope. Yeah, which also carries with it a danger, because remember when the Fed pumped a bunch of money into the credit markets after 9/11, and then we arrived at 2008, 2009. I mean, that was one of the big causes of the Great Recession, right? Is cash
so cheap, and people were using it to buy so many houses.
Well, I mean, you look at that. I just watched The Big Short the other day, actually, and one of my favorite movies. And actually, you should also keep a look on the fact that the government's currently buying mortgage-backed securities. It's the only ones wanting to buy mortgage-backed securities. So they're providing super low interest rates and actually buying the mortgage-backed securities off the brokers. So it's not long here. If it keeps going too long, pretty much the government will own all the mortgages in the U.S.
Oh, that's interesting. So let's. I actually want to come back to that if we have time. But okay, how about someone else threw out, like, what about traditional debt? What about if they have a credit card with a $35,000 limit, or 2 or 3 credit cards like that? What if they have an existing line of credit from a bank, whatever that's secured, by whether it's their house or whatever? I think the big question is, do you think? I mean, there was threat of, in the 2009, the Great Recession. I don't know if it happened, but I remember there being like lines of credit where you had $100,000 in available credit, and then they froze it, so you couldn't take any more money out. So I've heard some people saying, well, think about drawing some of that credit out now, some of that, the cash out, to hold on the sidelines. What's your take on that?
If you definitely absolutely need the money, I would do it. Just because, like a draw hold, which is what it's called. I suspect if things get real bad, that might happen. It's still expensive because you're not going to be making any money holding the cash. You're going to be paying whatever the interest rate is on just to hold it as a cash cushion.
Right.
But I think that's prudent if you're definitely going to need it in the short term. And I think in terms of credit cards, it's a similar thing. I had something similar happen to me. When was that? That might have been around 2008. When I was, I had some cash flow issues at the time, and then I was just working my way up on my Amex, and I knew I was going to get paid in like a month and a half, so I wasn't worried about it. But then all of a sudden Amex says, oh yeah, we've changed your credit limit to $1 more than your current limit. So they effectively yanked the credit and they do that without notice, right? Obviously, because otherwise you spend on it. But one thing I did hear, specifically as it relates to Amex, is that if you call them up, they will defer payments for up to 2 months currently.
Got it. And there's a lot of folks. Yeah, it is. There's airlines letting you change tickets with no change fees. There's hotels letting you cancel. There's a lot of that going on now. I know. We'll see how long that lasts and all that stuff. But last bullet I had here is these SBA loans, and this is not the traditional SBA loan stuff that we have seen over the years, which I think most of us wouldn't consider. They're trying to put a bunch of money on businesses because they don't want there to be this. I've seen estimates of 40% of brick and mortar, mom and pop owned brick and mortars going out of business in the next 2 months or something. I don't know if those are accurate, but they want to keep happening. So can you talk us through what you've learned about the SBA options?
Sure. So there's basically, so the way I understand this is that there's basically been 2 relief bills passed by Congress, and in one of the first two of them already passed. Well, 2 already passed, and the third one they're working on. In one of the first 2, they passed this called FFCRA, and I have no idea what it stands for, but it's basically an SBA loan. It does have a personal guarantee, and you can borrow at a pretty cheap rate. I think it's 3% or 3.25% or something like that, and it's basically by SBA banks, but it's guaranteed by the government. And it, at first blush, I think it's quite an appeal. Accepting the personal guarantee, I think it's quite an appealing. One thing I would caution is that in the politicians over had to pass the third relief bill, which sort of got clogged up in the Senate Sunday, and in there's I don't know exactly what it's called, but there is more beneficial relief from some of these companies, and I think the story, you can borrow up to 2.5 times trailing 12 months payroll, and as a loan, guaranteed by the government, and it's a reasonably long payback time. And I think there's some talk about, and I haven't actually read the bill, talk about if you don't let people go during this period, the government effectively forgives your loan after a certain amount of time. That's my understanding.
Wow, that's crazy.
They're pumping money. Because I mean,
Yeah.
look on on Thursday, the unemployment numbers come out, and usually that's about 200,000, and they're expecting it to be anywhere from 700,000 to 2 million, which is
Yeah.
pretty crazy.
That's that's pretty bleak. And the
Yeah.
gamble at this point is how long does that last? What is next month's? Is it multiple months of a million, or is it 1 month and it just winds up being a V shape versus a crater in essence, right? Is what we're
Yeah,
kind of trying to figure out
I
right now.
think like, yeah, I mean the banks, that's the analysts, they seem to fall over themselves to try to figure out, come up with the most bearish GDP estimate. I mean, the first one, like Goldman came out about a week ago and said, "Oh, we think there'll be, roughly zero Q1 and then maybe down 8% and then roaring back in Q2 and Q3." I heard Goldman was saying it was going to be -9 this quarter, -24 in Q2, which is the biggest drop in GDP in the history of the United States, I think. So I guess we'll see. And this is the thing, like there's so much uncertainty, and like
Hmm.
the most concerning thing I've seen is the fact that the Fed seems almost impotent in terms of turning the markets around. All this stimulus stuff should be putting a floor on things, and it just doesn't seem to be, at least not yet.
I just think
I
there's
hope
so
it
much
does soon.
fear. It's they can stimulate all they want, but until people know if their kids are going to go back to school, if the business down the street is going to open, like that uncertainty, I think is just in everyone's everyday life. I went to, like I said at the top of the show, I went to Costco yesterday. I have not been inside a Costco in well over a year, but I was driving back from somewhere, and we needed some staples, and I figured out I'll get some canned food and whatever else, fresh food, and it was fine. The shelves were all stocked. There was nothing missing. But it was this there was a feeling of stress. Everyone around
Yeah.
was just in a hurry. People were staying away from each other. It was this odd air around us that we all know we're in a place where stuff could be transmitted. I don't know. It's just our day to day lives are we're all at just a higher level of stress. And I think traders and banks and the everyday Americans with money invested in the stock market are feeling that same way. And so I don't think
Yeah.
when I hear that the Fed is pumping money in, I know that long term that will help, but I'm personally not thinking that that's going to turn the stock market around this week. It just
No, I
it,
mean,
the imp-
the Fed can really only do something on the supply side, right? They can supply cash, and print money essentially. Versus this is also a combined, potentially supply shock, which is what they're trying to take care of, but also a demand shock. Because I don't care what the price of jet fuel is. I'm not about to go jetting around the world currently.
Sure.
So
Yep.
so yeah, and to your point, like on the sense of feeling, I feel like since this really took off 2-3 weeks ago, I feel my brain's been complete mush, and
Hmm.
I'm probably using about 20% of normal brain capacity on
Hmm.
non-coronavirus related stuff. So, and I think
Yep.
everyone is sort of feeling that way. It's super
Yep.
stressful for
I think
everyone.
a lot of us. Yep. A lot of us feel that way. How about someone else threw a question in that thread, and they said, what does it look like? This is less related to founders raising, but they said, what does it look like for a fund to try to raise right now? Like how what should we be? Yeah, should TinySeed raise our fund too right now? It's kind of the thing.
No, I think is the answer. I mean, the size fund we're going for, 35 to 50 million, is typically filled in by family offices. Family offices are like, big angel investors mostly. And I think the main they're a little bit more sophisticated usually. And actually one of the main problems, other than the fact that, I think a lot of these family offices are worried about things like, should I be escaping to New Zealand? Or what do I do with my kids around the house all the time, versus trying to have new conversations with emerging venture capitalists. So I'm pretty much putting that on ice until at least towards the end of April, because I think that's challenging too. And actually, one of the things that is sort of unique as it comes to funds is that all these family offices, they have a allocation, right? So they have some bonds, they have some stocks, they have some emerging markets, they have some this, they have some that, and all the stuff that's priced in real time goes down in value, versus venture capital holdings, if they already have some, that stays. That doesn't get repriced as quickly. So all of a sudden, where before you said, okay, I want 10% venture capital, if the market goes down 50%, all of a sudden you have 20% venture capital, which is way more than you wanted. so so if,
Yep.
if anything, like it's even more challenging because of the sort of illiquidity of the lack of real time price to venture.
Yep. Cool. There was one comment from Ken Wallace in MicroConf Connect chat room. He says, also, please let folks know that U.S. federally funded student loans have waived interest accrual for the next 60 days. Plus, they are giving folks the option to defer for at least 2 months at 0% interest. It's technically a forbearance. I just got an email about it this morning. So thanks for that, Ken.
Also, apparently they moved the tax filing date to the 15th of July without penalties.
I saw that.
Which is nice. I can take my tax bill and earn that sweet 0% interest.
Right, which is something I always file late anyways with an extension, but yeah, so that helps this year. I don't have to file that. Question from YouTube channel by Qubit. They're from the YouTube chat. Xander posted it. He says, what mic stand is that? So a little bit of a meta question. Essentially, I went to Amazon per Craig Hewitt from Castos, his recommendation. I got the Audio-Technica ATR 2100. I believe that's what my mic is called. And there was a package on Amazon that was like $90, and it was the stand and the holder and all the stuff. So I don't particularly know what the stand is, if it was put together by a third party or if Audio-Technica actually supported it, but that's where we are with that. We have no other questions in the chat, and we're wrapping up, sir. Thank you so much for taking 30 minutes out of your day to come hang with us on MicroConf On Air.
Sure, this will be my productive part of my day.
Yeah, exactly. I actually got something done here. So
yeah,
if folks want to keep up with you on Twitter, you're at Einar Vollset, and Xander, maybe producer Xander, maybe if we have the bottom, lower third, so folks can see how his name is spelled. It's just his first and last name crunched together. Interesting tweets coming from him now and again, and I mean all the time, of course.
Just freaking out about the markets.
Totally. So tomorrow, Craig Hewitt of Castos. Speaking of Craig, he's going to be joining me on the show. He's going to be answering questions about his MicroConf Europe talk. The title of that talk was Staying on Top of Your SaaS Metrics, Knowing What to Measure and What Not to Help Maintain Sustainable Growth. And if you go to our MicroConf YouTube channel, you can just go to YouTube, search for MicroConf. It is now live. And watch that talk tonight or in the morning, and I will see you here same time, same place for a conversation with Craig about everything he talked about in that talk, as well as